earlier, Portugal held its debt auction for bills, and it was a success. A German newspaper now reporting that Germany is considering a plan that would help Greece restructure its debt. With more on Portugal, Germany's potential plans for Greek debt, and the overall health of the Eurozone economy, we bring in Julian Callow. He is chief European economist for Barclays Capital. He is also a member of the European Central Bank's Shadow Council. Julian joining us from London. Julian, thanks so much for joining us. What do you make of this small bright spot? We know it's only bills, but the Portuguese auction did go pretty well. I'll ask you about that first before we tackle what Germany might be planning with Greek debt.
I mean, obviously, we have to accept it's encouraging news, and we have, of course, been seeing a lot of buying by the European Central Bank in the course of the last couple of weeks, which has been helping the peripheral markets as well. Investors have been realizing, I think, that there is still more that can come out of the EU governments, particularly out of Berlin and Paris, in the way of providing greater support to these peripheral countries. And finally, investors were generally, I suspect, quite short in December, so there's been a bit of short covering going on as well. That said, I think we shouldn't kid ourselves that there's a lot of problems still that need to be tackled. There are many different dimensions to this, the competitiveness and economic, structural problems, the problems with private sector debt, and also the problems there with public sector debt. And a lot is going to really hinge on how well these economies are going to perform as they undergo very severe fiscal tightening over the course of this quarter and future quarters.
Julian, I want to call your attention to, well, you already know this, that you do have, in fact, German yields jumping right now. The idea here that is being floated in a German newspaper that Greece would be allowed to buy back government bonds with funds from the European Financial Stability Facility with favorable interest conditions. Now, again, this is according to a German newspaper. They don't necessarily cite any sources. How likely, on a scale of 1 to 10, do you think that scenario is? And then how worried should we be if it is likely?
Well, just to be precise, if I understand this correctly, because news was breaking, if the question is, would the EFSF be able to purchase government debt going further forward to support the markets, then yes, I would say that I see that as likely, maybe 8 out of 10 or so, if you like, because I think the European Central Bank has been the buyer, but it is getting very reluctant to continue such considerable intervention here. It's interesting, if you look at opinion polls that are conducted about trust and confidence in the European Central Bank across European households, the net positive trust rating has gone down quite markedly to record lows since the financial crisis first began in late 2007. And I think the ECB is getting concerned here that it's dealing with too many issues. So it wants to get back to the basics of monetary policy, which is why the EFS buying could be a support to these peripheral markets.
Julian, thanks so much for the time. Julian Callow joining us there. He is chief European economist at Barclays Capital.